All right. Good morning. A little later than usual. This is Axel Merk, President and Chief Investment Officer of Merk Investments. Amazing non-farm payroll report. Question is why it has been so amazing. Before I go into that, markets are full risk on. S&P futures are currently up 84. Bonds on the 10-year are down 30 ticks. The 30-year, 2 full points and 9 ticks. The 3-month T-bill rate is at 15 basis points. The 3-month LIBOR at 33. Effective Fed funds rate at 6. Interestingly, no changes in rate hike expectations. And so this report doesn't change what the market is pricing in, at least not over the next 2 years. And oil is up 4.6% at 39.14. That's for West Texas. Brent is up at over 5% at 42.05. The euro is slightly weaker, 113.11. Strongest currency is the sterling. By the way, Boris Johnson yesterday said he would welcome 3 million folks from Hong Kong to move over to London. Had an editorial, so seems pretty serious about that, escalating things. Weakest currencies are the so-called safe haven. The weakest is the Swiss franc, down 78 basis points. The yen is down 51 basis points. And gold. Gold is down just under 2%, 1.97%, minus 33.67 at 1680. 35, 1680, so under $1,700 for gold. And if I look at world equity markets, Dow is up 3.33%, the S&P 2.5%. In Europe, the US Stocks 50 is up 3.3%. So all these markets up. Asian markets obviously closed before this report, but they were also on a positive note. The Hang Seng Index in Hong Kong was up 1.7%, for example. And so what's happening here? What's going on? Part of the reason why I started this late is because we do have internal discussions, obviously, that take priority over my rambling here on the air. And clearly, the PPP, the Paycheck Protection Program, has helped dramatically getting people back or to work. As a personal anecdote, I have a friend who runs a restaurant, had struggled to break even before the COVID outbreak, was just breaking even. Things were just getting a little bit better. And then, of course, COVID hit them. And so she, of course, applied for and received the PPP. One of the big challenges she had is she needed to get workers in because she got the money. It's meant there to be paying for payroll. And the sort of jobs that she's offering are not high wage jobs for the most part. And so she had to think about how to get these people to work, and apparently, as this jobless non-farm payroll report suggests, that she and many others have been successful in finding ways of getting people to work. Not everything is rosy in the non-farm payroll report. The permanent layoffs have increased by over 200,000, and also let's remember that there's a lot that we have to question in these sort of things. The data collection is different, the way that people respond to these numbers, and so forth. And then obviously we have this inconsistency between the jobless claims, which are actual claims that people file, versus this non-farm payroll report, which is more of a survey-based one. The way that these surveys are conducted is also, of course, different. Then when you can't ask people, and so forth. So I'm not suggesting that this report was bad, but the question is, where are we and how much damage have we done? It was always clear we'd rebound. Are we rebounding very quickly? People are eager to go back to work. What sort of businesses are closed? What sort of jobs will not come back? And at this stage, there's a tailwind in the markets, and the glass is certainly more than half full right now. Many technical indicators have turned positive. 200-day moving averages are now indices above those averages, and so forth. And so there's clearly a lot of damage there. The question always is the market ahead of itself, and we've asked that for many years in the aftermath of the financial crisis, but you got all this easy money. And on top of all that, we have some facilities are only just starting to get ramped up. Um, the Fed wants to have its mainstream lending facility. To me, that's a huge mistake because it's stepping onto political turf when there's no need for that. And so um, the question really is, at what stage does anybody dare to bet against this market, or do people just take chips off the table? And part of the reason people don't take chips off the table is because they're out of the game. A lot of people are on the sidelines, and that of course can help drive a rally like this. Not giving investment advice here. Indeed, I should and I will give you my disclosure that those of you who have watched this for a while have seen a few times. Need to make sure that that I am reminding you that this is not investment advice. Um, so, is it an opportunity to buy if you're a gold bug? Is it an opportunity to buy if you're a stock bug, if that's what you want to call it, or is it to sell and cash out? Um, I have been preaching that investors should follow a process, and that's really just a reminder that whatever your process you have, check whether you've been following the process. Um, the fear of missing out is, of course, very significant if one does have that. And then, of course, one of the things is the president gave a mission accomplished speech this morning, and I'm not so sure. I mean, those who are watching this are probably data buffs in some ways. You may be aware what it means, these numbers. But a lot of people, they still see an unemployment rate that's huge, over 10%. And so how can you celebrate that? But so I'm not sure whether that message comes across. But in any case, when you have a mission accomplished speech, we've seen that in the past. George W. Bush gave that on this. Um, Gave that on that aircraft carrier, and those are dangerous speeches to give if things that do actually not improve significantly. Um, Again, one of the beauties about the U.S. economy is it is so darn flexible. So people are laid off, they're hired, and they will be hired probably into new jobs that are coming about, whereas the rest of the world is more stagnant. And if indeed one doesn't have to change the way one is doing things, maybe that's a good thing. Question is whether we will adjust it. I was in my office twice this week, and and I'm the only one who's there. I got one other fellow who would kind of like to come back. I wanted to come back once, and the second time was a um, well, I came twice. That's the short of it, I suppose. And I hear from others that next week the offices will be fuller. And yes, traffic will pick up. Now, of course, we do have the riots or the threat of riots happening. And so San Francisco, where my office is, was deserted. I had been in the office once 2 weeks ago. It was much busier 2 weeks ago than it was yesterday, and so it's an interesting environment. I may have mentioned here that here where I'm based in, I'm doing this right now from Palo Alto. There was a curfew imposed. I thought it was a 10-day curfew. It actually turned out that there was the city of Santa Clara, not the county of Santa Clara. Got that wrong. There were so many messages on curfews that I guess one shall be excused for getting it wrong. But in any case, the Palo Alto curfew was lifted, which is urgently necessary in my view because these restaurants that want to open, I mean, the workers need to get home by the time of the curfew, and so how are you going to facilitate that? And so many restaurants do shut down at 6 already that are open every day, and of course they're missing out on the evening business. Does that push the needle on the S&P 500? Does it push the needle on other things? Probably not. And so that's part of the reason why what we're seeing on the ground doesn't quite reflect what we see in the markets, where the Fed does seem to be very willing and able to print a lot of money and has a promise to do that for 2 years, right? Or for until we get the unemployment rate back. Right? The Fed has seen that we can push this down. We can push it down all the way until the unemployment rate is at historic lows and still not get inflation. So they think anyway, and so now they're emboldened to do this again. And so we may well see 0% interest rates until we get there. It's an interesting concept. Now I'm not suggesting rates should be hiked today, but I do think that there is a time when you take away emergency measures a little bit, and I'm not suggesting that certain help shouldn't be provided, but when it comes to the Fed, one should try to get back to a more normal mode of operation and not think that printing trillions is normal. Is that really necessary when other things are happening? And in many ways, they're just chicken because they're so worried about in the past when they have talked about tapering, that would be a bad idea. But it's part of the problem is that that's what you get with forward guidance, right? You get forward guidance, and then when the situation on the ground changes, how are you going to change? And then, yes, the Fed will change, but they will change much more reluctantly than they otherwise would. And so I'm not a fan of forward uh, guidance. And I just see a Bloomberg headline: Trump will be asking for payroll tax cut, more stimulus. Yeah, isn't it great? Let's just spend, print. And of course, you can always ask for things. That just requires a microphone or a Twitter account, I suppose. That doesn't mean the Congress will go along. I think the happy days are over in getting things done in Congress. Now, in the rest of the world, it's a little different. They do continue to get a lot of things done. Talking about the rest of the world briefly, the European Union appears to be lifting most travel restrictions within the EU. In about 2 weeks, and so there is activity is coming back, and so that's going to be interesting to watch. Anyway, have a great weekend here, and I hope you have a job or you're going to have a job. If you don't have a job, if you do have a job, think of those who don't have a job, and maybe think of giving them a referral or think of ways that you can help them to find some job. Have a great weekend. Be safe out there. Bye.